I'd like to thank Lord Smith for his wonderful introduction to the Green Investment Bank. There is no doubt it is hugely anticipated, and I would like to now move to the panel discussion where we can discuss this a little bit more. First of all, I'd like to invite to the platform Kenneth McCritchie and Ian Nolan. Kenneth McCritchie is the General Counsel with the UKGI and Ian Nolan, Head of Origination. Thank you. Okay, just as we're finishing miking up, I'd like to just ask, we've heard about we're in the final stages now in the transition from the UKGI to the GIB. Could you just talk us through what's going to happen next?
Yeah, absolutely. The one, as Lord Smith mentioned, the one external consent which we need in order to get the bank up and running is the state aid consent. And that has taken quite a long time and has been quite a challenge to get through, but we are coming to the end of that. As soon as we get that, Green Investment Bank will be able to operate as a bank amongst other banks. And we already have premises in London, in Millbank Tower. We are in the stages of negotiating for premises in Edinburgh, and we already have temporary premises, excellent temporary premises actually in Waverley Court, and we are ready to get up and running. The advantage we have with UK Green Investments is, again, as Lord Smith mentioned, we've got 30 professionals who have already been mapping the market, building the pipeline, and are really ready to get moving in the priority sectors which the Green Investment Bank has had identified for it from government. So in that sense, the team is already operating, it's ready to move into Green Investment Bank, and it already has a pipeline of projects to move forward with. So we really are ready to move forward very quickly. And just to finish on that, we really have to move quickly. We've been given a budget, as you know, of $3 billion, which is roughly $1 billion a year for the next 3 years, and the clock is already ticking in the first year. Obviously, the first financial year starting in April. We have got a job to do to make this happen. So having this kickstart is absolutely what we need.
Okay, thank you. Although, Ian, I have to say, you know, the Green Investment Bank is not really like any other bank because it doesn't have any borrowing powers. So I'm just wondering, is that something that you would like to change? And if so, if it did have the ability to borrow, what would be a good ratio?
Good question. I think, as Robert said, £3 billion is actually quite a lot of capital to start with, and we would view it as a challenge to make sure we deploy that capital to good effect in the first 3 years. Hopefully, where we're at after that is that people will look at what we've done and say they would like some more of that. They can see that we're making an impact. They can see that we're making a good return, in which case, hopefully, lots of other sources of funding open up. I would say that if you think about the capital as equity capital, which it is really, we are not geared like any other bank. But one of the implications of that is that other banks, which are typically funded 90% with debt, 10% with equity, they have to manage their risk appetite very, very carefully because they have lots of contractual liabilities. And you heard that from what Susan Rice was saying about Lloyds Bank and from Andrew, indeed, this morning. Yes, it would be great to get to the point where we are debating larger opportunities and alternative sources of capital, but gearing the bank's balance sheet would inevitably constrain the risks we're prepared to take. So we would tend to think of the initial position that we have, of $3 billion of equity capital, as being very well capitalised, and if you like, it's plenty of money to be getting on with and to prove that we can do a good job.
Okay. No, I think no doubt it's a very good start at $3 billion, but we're looking at 200 billion of investment that is required in the coming years, and I take it you'll be looking to make sure that the projects that are being invested in are levering in from elsewhere.
Absolutely right. So it's fundamental to what we're trying to achieve that we're partnering with other investors. 3 billion is a lot of money, clearly, but it's a small amount of money in relation to a 200, 300 billion pound challenge. And we will not meet our mission unless we persuade other investors to come with us and unless we partner with other investors. That's a fundamental part of the strategy. Partly that comes out in the debate about crowding out. The last thing we want to do is to make life harder and more difficult for those people who are already investing in these sectors. We want to work with them and we want to partner with them. And in the end, we will only mobilise other capital by proving that investing in these green infrastructure projects is a way of making really good investment returns. If we can prove that, other capital will arrive at scale, and then we have a chance of solving the 200 or 300 billion pound problem.
Okay, many thanks. And now I'd like to open this up to the floor for some questions. Could we have the lights up? Anybody willing to go with a first question? Sorry, yes.
That was very interesting, panel. Depends who you ask. 3 billion has been quoted as a lot of money, but not a lot of money. So I think what I'm trying to get to the heart of is, could the Green Investment Bank, because it's been much heralded, but could it have some kind of influence and role in Scotland regarding one issue that's been here for a long time and will continue to be unless addressed differently, is food waste. You've got lots of AD plants being built in the pipeline. You've got 32 local authorities with potentially 32 different approaches on how to collect food waste. And I'm wondering if you can use your influence to leverage a consistent and more sensible approach to generate energy from waste.
Okay, shall I have a go at that one? I think the answer to your question is yes. We have a dedicated sector team that looks at waste and energy from waste, and AD is a key focus of what they're doing. Unfortunately, because waste has not been a part of this conference, we don't have that team here. We have a number of the other sector specialists from our team here. We don't have Ed Northam and Adrian Judge who head up this effort for us. They have spent quite a lot of time up here in Scotland. They were here a couple of weeks ago, and they're trying to work out how they can work with all of the authorities to see if we can help finance the waste strategy in Scotland. So that is an ongoing piece of work. Yeah.
And it is probably worth saying that generally that is absolutely one of the missions of the bank, and it goes across waste and particularly into energy efficiency, where the challenge is not just to finance deals which are ready to be financed. The challenge is actually to get the interested parties together and structure things in a way that creates bankable deals. So we're very much into that sort of early stage investment of expertise in getting things structured to create financeable pipelines.
Okay, thank you. We have a further question from the floor, please. Yes, right at the back, thank you.
Good morning, Mark Simmers from Celtic Renewables. It strikes me that obviously investing in this sector, a lot of the potential investments could be in projects that are pre-revenue, that might have quite a high risk profile. What is the Green Investment Bank sort of attitude towards that situation? And how are you looking to sort of mitigate the potential risks of investing in this market?
Okay, I'll have a go at that one. So just to be clear what our investment mandate is, and Robert talked about the priority sectors that we've been given to focus on. They're offshore wind, they are waste, and they're energy efficiency. That mandate is really about the building out of infrastructure. So that is not a venture capital mandate. It's not really a development capital mandate either. Those sectors have been chosen for very clear reasons. On the far side of those are solar and onshore wind, where the judgment is that the private capital markets do not need help. Those sectors are perfectly well financed without our help. And on the other side are a whole series of earlier stage technologies, and they include wave and tidal, and they include a number of waste technologies, and they include carbon capture and storage, which are not priority sectors for us. because they're not at that stage of being nearly investable. So our mission, our challenge, is to accelerate investment, but also to make sure that we build an enduring institution, which means that we have to make money. We have to be sure we're making money, making a return, as Robert says, from the capital we're deploying. So our risk appetite and our focus in the market is quite tightly defined. The sectors which we're going to tackle are certainly have plenty of risk in them, and that's why the private capital markets are somewhat sceptical about them. And our task is to work with people in those markets to see if we can make those sectors mainstream investable. And if you like, we will have done our job in those sectors when the pension funds and their banks generally want to deploy large amounts of capital in them. And when we've done that with the initial priority sectors, we will be able to move on, and hopefully by that stage, some of these other technologies will have moved on and become nearly investable and fall into our mandate. So that would be how we think about it.
And do you anticipate that being possible within the first 3 years of the bank?
I would think it would take longer than that. I think the priority sectors will always be reviewed, and the world always changes, doesn't it? But I think it will take us more than 3 years before the mainstream sectors before the initial priority sectors have become mainstream investable. We want to do ourselves out of a job in the priority sectors. We want to get to the point where the private capital markets no longer need our help and assistance in them. I would be delighted but surprised if we did that in the first 3 years.
Okay, and just to follow on from that point there, in particular in terms of wave and tidal, there's a huge amount of R&D going into different types of wave and tidal here in Scotland, and in comparison with what's going on in other places in the world, Scotland is leading the way.
Yes.
So in particular in terms of wave and tidal, what would it take for wave and tidal to become more attractive and more commercial and more viable for the GIB to therefore decide that that can move into a priority area?
It's a good question. So I was chatting to somebody from the European Investment Bank yesterday, and they're undertaking a study of the technologies to try to understand the rate of development and the point at which some of these technologies become investable. And we're very keen to work with them and share that work and learn about the development of that industry. I think if you look at it at the moment, it gets lots of government support, doesn't it? And 5 Rocks tells you that government is prioritising this, government recognises the importance, government is prepared to commit capital to it. There are lots of sources of capital from government for demonstration projects and development grants and so forth, which are a good thing, but you need to keep them separate in your mind from our mandate.
I think you want to avoid being seen possibly as a distributor of funds. You are a bank, you are investing, you are looking for a return on that investment.
Absolutely.
And that's whilst you're not a bank who can borrow, you are a bank that needs returns on your investment.
Exactly right.
Well, I mean, it goes back to this whole point. I mean, there's been so much focus on this issue of can the bank borrow? And, if the bank doesn't produce returns, nobody's going to lend to it. So it's pretty obvious that the whole model, those who are keen on borrowing must also be keen on the bank producing commercial returns in a way which enables it to be sustaining and therefore move forward. So that all really works together as a consistent whole.
Okay, thank you. Another question from the floor. Yes.
Good morning. Martin McAdam from Aquamarine Power. We're a wave energy developer, but I'm not going to ask you a question about wave energy financing. I think your answer is pretty clear on that. What I would like to ask is £3 billion. As people said, it seems like a lot, and then in other ways it's not such a lot. And how is that money going to be invested? And the priority areas you identified, the key one is obviously offshore wind. I don't understand why that's one of your key areas, because that's already investable. And if you do go after offshore wind, if you look at a project, 500 megawatts, £3.5 million a megawatt, there's your $3 billion gone in one transaction. And I'm sure that's not what the intent is, but I would like to understand better how the funds are to be invested in offshore projects, how many, and what are you trying to do in that space?
Who would like to take that first?
Shall I have a go? Okay, so I think we're back to the point about mobilising capital here, and you're absolutely right. You don't build many offshore wind farms, even if we deployed all of the $3 billion. So what we have to do is we have to work with and encourage other investors, and we want to establish offshore wind investing as a recognised asset class and a normal form of mainstream activity in the quoted equity markets, in the unquoted equity markets, in the bank debt markets, in the institutional debt markets. Because those are the sources of large capital, and until and unless those sources of capital have confidence that they're going to make good risk-adjusted returns, then our $3 billion doesn't solve the problem. So what you will see us doing is you will see us working with banks and working with equity investors, where they are keen to deploy some money, where if we can help them, we give them some more firepower, where if we stand alongside them, we give them some more credibility, where we fill gaps in syndicates, debt or equity that people are trying to build. And what's really important is that the early investors whom we invest alongside, be it debt or equity, make all and more the money they expect, because that is what will attract further capital in.
Would you like to add anything?
Yeah, I mean, the whole issue of size and $3 billion is exactly the point in relation to our priority sectors. If you look at $3 billion in the sense of waste projects, it's a lot of money, and it can do a lot. If you look at it in relation to offshore wind, it really is not going to change the position dramatically. And we have to be frank about that and realistic about that. The government has given us these priority sectors and identified these as the ones that we need to focus on. We have been encouraged to aim to get 80% of that $3 billion into these priority sectors. And beyond that, there is no limit and there is no target for each of the sectors. So it is very much a case of looking at the sectors and seeing how we can best make a difference in these different sectors. And you're clearly right that it would not make sense for the bank to spend that $3 billion on one or two offshore wind projects. And so we will clearly be focusing in a way which enables us to do what we can on the offshore wind side with the limited resources we have, and actually do quite a lot on the energy efficiency side and on the waste side with the large resources which we have. So it's an interesting balance that we have to work out.
Okay, thank you. Is there a further question from the floor? Yes, sir.
Max Karkas, Kailulum. Just following on from that, I mean, it's interesting in that just understanding your criteria for success, really, I suppose. You've got 3 years to deploy the funds, so I suppose one criteria is you need to have deployed the funds. But then within that, what's the criteria for success in terms of making a high return, for example, or a commercial return? You've probably got a lower limit set by Treasury, and you can be further along on the return expectation and risk expectation within that. But it comes back to the question of what's the criteria for success, and how do you measure that? How do you it's about mobilizing this other sources of finance. How will you go about measuring that and defining that you've achieved what you've set out to achieve in the next 3 years?
Shall I start off on that? Yeah, it's an interesting discussion, and it continues to be a discussion. In fairness, we are still the vanguard of GIB. It hasn't started yet. Our CEO is still to join, and therefore that has not by any means been finalised and needs to be a continuing discussion. But we have given a lot of thought to all of that, as you would anticipate. And there are a number of areas where we are going to have to, as a startup, we're going to have to develop our thinking. We have started on the green side. We are going to have to become, I think, more sophisticated over time as to what we identify as creating the most green impact. For the time being, we're accepting the priority sectors that we have been given by government. But in terms of key successes, we want to be seen to be investing in the green areas which are seen over time to be long-term, sustainable, and actually achieving the green impact. So that's one side. You mentioned mobilising capital, and we will also be measuring that, and that will be a major element in terms of our success. Everybody's talking about the 3 billion, be it great or small. We have got to multiply that. And so that, again, will be one of the key indicators. And return, you are right. We have a limited requirement for return from government. And so, therefore, we are required across the portfolio to make a return. We are not required to make super profits. And so on that basis, we have an interesting challenge where we can seek to focus on these other key success areas as opposed to just focusing on the return area. But we do want to keep an eye on that because we recognise that it fits into the mobilisation effect. I mean, we're not going to be able to mobilise other private capital to come in and join us if they think we're a low profit-making institution, because by definition they will say, well, why on earth would we want to invest alongside GIB? So to some extent, the profit side of things is going to be driven by the mobilising side of things. So these are the sorts of areas that we are looking at in terms of key success. And, you know, frankly, in the next spending review, I think we want to see industry saying the Green Investment Bank is a good thing, it's making a difference. We want government to think, actually, this is absolutely the policy that is creating and helping to create the transition to a green economy. And so frankly, we want to get more money in 3 years' time, so that will be another key success area.
I wonder, though, if you could just expand, because it's quite an important point on what really constitutes a green project, and just maybe elaborate a bit more on that.
Yes, I mean, I think we are building up and will have specific expertise in that area, and we will engage with the green lobby, with industry, in order to be absolutely at the forefront in terms of that analysis. We also, as Green Investment Bank, are required to align ourselves with government policy. And so therefore we will follow very closely what government policy is in terms of development of the green economy. And it doesn't mean that we won't be carrying on quite a lively discussion within government. I mean, we do see ourselves being in an interesting position where we are within government but operationally independent of government, which should enable us, we hope, to be a good bridge between private sector and public sector in many areas, but particularly in this whole discussion around green and what is actually, I mean, we are the sort of, we like to think of ourselves as being the green people who also make things happen. We're not the visionaries, but we are looking at things that actually make things happen. But we need to be very much following what the visionaries are looking at to drive forward.
Okay, thank you. Ian, would you like to add anything to that?
No, I think that captures it for me.
Great, thank you. Just to follow on the question of success, is there any way in which the beneficiary projects will be measured in terms of deliverable outcomes that would be different from normal investment finance?
We will certainly be measuring the green impact. So an offshore wind farm, an energy from waste plant, we will be measuring the carbon reduction, we will be measuring the emissions, and that will be certainly, you know, we have a double bottom line. It's about green impact and financial return, and we will measure and report on both.
Okay. And in terms of, again, a beneficiary project coming along to the GIB, what kind of support would they get that they wouldn't get elsewhere? Is there any other further support that would come from being invested by the GIB that's different from other traditional investors?
I think hopefully what people will find is that because we're a very focused investor. We've got a narrow number of sectors to prioritise. The team we've recruited are therefore specialists. And so what people will hopefully find is some expert knowledge on the other side of the table, an understanding of their industry dynamics and the challenges. We have already, and we will recruit more technical expertise across the sectors. And over and above that, we hope that having the Green Investment Bank as a lender or an investor in your project or your company, there will be a validation, and there will be a boost to the credibility of the business. And we are going to have to earn this reputation rather than assuming it is bestowed on us. But we very much want to get to the point where other investors want to follow us because they respect our expertise and our track record, and they think we know what we're doing, and it's therefore safe for them to follow. That's an aspiration for us to build that reputation.
Okay, thank you. Any more questions from the floor? Yes.
Angus McCrone, Bloomberg New Energy Finance. My question was about the pricing of the debt that the Green Investment Bank may be offering, because Lord Smith was very clear in saying that you're not going to be providing either soft loans or grants, but that still leaves sort of two possibilities. One is that you lend on the same kind of basis as the European Investment Bank, so you're making a return, but the pricing it maybe begins with a 2 rather than with a 3 in terms of basis points over LIBOR, or that you're a kind of fully commercial lender and you're effectively pricing your debt at the same levels as, for instance, Andrew Bouglis at Royal Bank of Scotland. So which of those two models are you going to follow, or is it going to be something in between?
I think one of the main drivers for us is going to be the consent that we get from the European Community. And initially, our consent will be limited to investing on commercial terms. So in that sense, we will not, in the first instance, be looking at providing any form of subsidised lending or investment. The community certainly anticipate that we will take that forward and identify specific areas and specific products where we may well look to provide subsidised lending to market, still giving a return but on a subsidised basis. That is something which is work in progress, but in the first instance, the bank will be lending and investing on market terms. Do you want to?
Yeah, absolutely. And just to add to that, if you think about this question from the perspective of people who are trying to lend or invest in these sectors already, and we've spent a lot of time going around the market talking to them, the obvious concern, if you look at the world from their point of view, is, well, hang on, is GRB arriving and it's about to start providing subsidised capital at large scale, and those people are working hard to try to make good investment returns and build a business investing in these renewable projects. Are we about to undercut them? Are we about to undermine their business model? And if we were to do that, how exactly is that helping? So that's the crowding out issue, right? As Kenneth says, the state aid permit, as we call it, is a huge driver of where we end up on that issue in due course. I think what we have to work out as a strategy is, we have to work with the existing investors in the market. Our arrival has to be something that they welcome, that helps them build and develop their businesses and also helps the projects get invested. So we have to think really carefully about which part in the capital structure we can go into, where we can make a return so that we're a sustainable institution, but where we can support rather than undermine existing players.
Thank you. Further questions? Yes.
Hello, Adrian Gillespie. I'm the Director of Energy at Scottish Enterprise. Just going back to offshore wind, I mean, there is a substantial investor interest in financing offshore wind farms post-construction. So I guess one of the areas that Green Investment Bank could really accelerate things is to take on some construction risk. But an additional impact it could have would be to take on construction risk within projects where there is significant supply chain involvement from companies investing in the UK. Has that been part of your deliberations so far, or would you be open to such deliberations?
Ian?
Yes, we've thought a lot about that, as you might imagine. The way we think about the chain for offshore wind in particular, and I think Andrew's talk referenced this to some degree, is the velocity of circulation of the capital is in danger of declining, right? And so big developers, utility companies, for example, are looking at even the wind farms that they've built, which are operational. The capital markets are not entirely there to support them with providing long-term financing. And for as long as that's true, if you're a utility board, then you're struggling to recycle your own capital into the next development project, into the next construction project. And you therefore pause before committing to the next final investment decision and the next construction. And therefore, if you're the developer and you're the guy one further down the chain, well, you're not getting your development project bought out. So actually, your cash flow suffers and you have to slow down your rate of activity. So the way we think about that is, yes, clearly we could dive in and say, look, we're here to help finance construction. The challenges with that for us are there aren't many other investors who want to come with us on that, and therefore the £3 billion does not go very far because we're not partnering with many people. And indeed, once we've committed the capital, the danger is that our capital then gets stuck in the way that other capital is stuck and not being refinanced. And therefore, as we try and think about this more strategically, we think that in a lot of ways, it's a little bit like a pipe that's blocked, right? And you can either push more stuff into the pipe, put more stuff in the pipe and push harder, but that generally doesn't unblock it. Or you could try to get, as we would call it, upstream of the blockage and try and pull, right? And in this analogy, pulling is represented by, can we help make the markets more functioning and effective and supportive for people who've got operational assets, so at least they can recycle that capital, and then they start building the next one, and then the developer gets financed out, and then activity starts to rise. And indeed, in many ways, if you think about it, that's a more rational place for us to start, both because other investors would come with us at that stage, and we're working on a number of projects which are like that, and because that capital will begin to flow down the chain. So, yes, we would love to partner with people to fund construction. I'm sure we will be doing that. It's probably not where we will start in terms of the initial investments. It's an ambition to get there. But we always have to go with the grain of the market and with other investors. And probably as we try to get the asset class established and people comfortable with it, it probably makes more sense to start with operational assets and make sure that capital is getting recycled and recommitted into the industry. If that bit isn't working, our $3 billion is just not going to solve the problem.
Thank you. Kenneth.
I think the same point, really. If utilities and developers are slowing down their rate of investment, then you have all of the uncertainty ripples right through the supply chain, doesn't it? And everybody pauses and thinks, well, do I really want to commit here? How certain am I? You know, how many orders have I got here? And therefore, what investment am I prepared to commit?
Thank you. Kenneth.
I mean, probably the only other thing, or one other thing to mention on this is that one has to look to see where the demand is in terms of financing. And, you know, offshore wind farms have been financed elsewhere with a very conservative contracting strategy, which is very expensive to do, but will attract finance. Utilities are not really wanting to spend that money because they feel they're much more able themselves to manage these construction risks, which is an absolutely justifiable commercial decision, but it doesn't operate in order to facilitate financing. So there are underlying issues there in terms of the financing of the construction phase of offshore wind, which apply to all of the financial institutions. And Green Investment Bank is not about to step in and say, you know, we'll just take all these risks which have not been covered off on a contractual basis.
Okay, thank you. Yes, Rina.
not to be a Scottish Enterprise hogger, but Lena Wilson, Chief Executive of Scottish Enterprise, is related to Adrian's point. Can I first of all say I found your clarity so helpful this morning, and the candor, I've really appreciated it. If I've learned anything, it's just to be clear about your objective, because lots of people want you to do so many things, so I've really appreciated that.
Thank you.
Related to that, I absolutely get the clarity about the double bottom line, so green impact and commercial return.
Yes.
Is there an option or possibility for a treble bottom line, so green impact, commercial return and economic impact, because that might have a little bit of different decision making around two similar projects with equal green impact and commercial return?
Good question.
I think we are struggling to try and manage the double bottom line at the moment. To add another one to our challenge is maybe a bit much.
No, but I think Lena Wilson's point is actually very important, because there is a wider impact, a wider economic impact, and in particular,
absolutely.
I think in particular, in the current economic circumstances that we're living in, we really want to see the green economy absolutely boosting jobs and boosting economic growth, because it's one of the engines that we do have here. So I think, I'm sure if I advocate Scottish Enterprise, we'd be very willing to work with the GIB to just map out how that could happen, because it's very important.
Absolutely, and fully understood. And I think we absolutely want to work with Scottish Enterprise and similar bodies whose focus is that. In terms of what the Green Investment Bank's focus is, we've been essentially given a framework document by government, and that framework document is very focused in terms of the priorities and the way we are meant to operate. While clearly we have to have an eye on that, and as I say, we want to work very closely with bodies who are focused on that side of things, our focus is very much on the green impact and the additionality and the mobilising effects. So that's where we are at the moment. The question probably is better put to the politicians than to us.
Who should be coming back on shortly. Ian, any further comments on that?
No, I think that's right. I think we all agree that if we can get these green infrastructure projects being built out, that's going to be a fabulous benefit for the economy. So will we measure for our stakeholders, the employment impact of the projects we help finance? Absolutely. Although, as Kenneth says, it's probably best that as a startup organisation, you ask us to focus on a narrow, small number of things and do them really well. And actually picking the right projects to invest in these sectors that we're really confident is going to make money and are green, that's plenty to be going on with as a challenge, actually. If that was easy, the private markets would be doing it already, right? So if we can get that bit right first, I'm sure the benefits to the economy will flow.
Well, ladies and gentlemen, I would just like to say thank you very much to both Kenneth and Ian for coming along today. I think I certainly am a lot clearer, as Lena's also said, about not only UKGI, but UKGIB and the distinction there. And we will watch with much anticipation in this final transition process into the Green Investment Bank becoming ready, open and ready for business. Thank you very much. And ladies and gentlemen, it is now time for coffee. Thank you.